Trading Nut, episode 7.
I'd say 90% of being able to be a good trader is having the experience and having the right psychology.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got a trader by the name of Richard Jackson on the show. Now, Richard has got a number of years behind him trading not just the futures markets, but also the Forex markets. And he's got some stories to tell us. He has got some stories. This guy has done a lot of stuff in his time, and he now runs Jackson Capital and Lupus Proprietary Trading. So he's got experience in those fields as well. So it's a real treat to have him on the show. He's based over in Australia. And I suppose one of the things that really comes out quite strong within this show is that it highlights that everyone needs to find something that works for them. So I've interviewed a lot of traders, right? And every time I interview traders, I hear, almost every time I hear a different approach, if not completely different. I hear at least a slightly different approach to the markets. But these guys are all still making it work for them. I mean, I had Daniel Chung on the show not that long ago. It was on the 52 Traders podcast, and he was talking about the fact that virtually every strategy works, but it just depends on if it works for you or not. That was one of his sort of quotes from the show, and it really sort of hit home with me. And this show highlights that it doesn't matter if you are, if you've got an approach that nobody else is using, or if you've had an approach that you found hasn't worked for you in the past, it doesn't mean it doesn't work. So, for example, I've had profitable algo traders on here, guys who are either trading robots, guys who are trading lots of robots, all automatic, all running back in the background, dozens upon dozens of strategies, and they're making money in their sleep. Whilst I've got other traders here who are purely discretionary traders, and they, then you can split that group up as well. And these guys are guys who are actually only trading with indicators who are doing really well. But then you've got a whole other group of traders who are discretionary traders, only trading without indicators, who almost despise indicators, or at least traditional indicators anyway. So, and then you've got guys who think the market's manipulated. Then you've got guys who think the market's just playing out human behavior. Everyone contradicts everyone else. I suppose the takeaway here and the thing to think about is it's all about finding something that you resonate with, something that works for you. And whatever that is, what my recommendation is to give it a try. Okay, give different things a try until you find something. Where I went wrong back in the day was I basically stuck on one thing and just stuck on it. I didn't move. I got stuck, and I kept trying the same thing over and over again. What I recommend these days is try it, dive deep, test it out, and then decide. So give yourself a time frame, maybe 2-3 months, whatever it is. 4 months, go, I'm going to give it a go for 4 months, see what happens. If it doesn't work, then I move on. Okay, so if you listen to the show, you're going to find out what didn't work for Richard in the show. So there was one thing that he just definitely does not recommend using anymore, but he does still use it in a certain way. You're going to hear what that is soon. Now, I want to give you some more lessons. These are not trading lessons. These are completely sort of not related to trading at all, but I went away in the weekend. It was my end-of-year football trip. So we've done one pretty much once a year. They seem to be going up in terms of their expectations and the quality of the trip. I mean, this year we went to Wanaka, which is a lovely spot. There's mountains everywhere, snowy mountains, a big lake. Absolutely picturesque. It's by Queenstown, and just have a look on Google it. You'll find out what it looks like. It's absolutely stunning. You come out of the airport and there's this humongous mountain just peering over you. Now, a few lessons here for anyone going on a trip with a bunch of men. Not so much. I don't think this sort of stuff happens on women's trips, but it definitely happens on men's trips. So, lessons that I learned were: if you're going away with a bunch of middle-aged men, don't take a fluorescent blue bag. Okay, I made the mistake, took a fluorescent blue bag. Everyone else seemed to have a grey or dark brown or light grey bag or black bag, and I had a fluorescent blue bag. I was tossing up, do I take the fluoro blue one or do I take this other one which is going to blend in? Not as quite as user-friendly and functional. I went with the fluoro blue one. Don't do that. You're only going to get abused the entire weekend. The other thing is, do not complain about the food. All right, so I actually didn't complain about the food here at all, but I did complain about the food last time we went on a trip. I complained about a steak, and this time I've really sort of learned my lesson. Don't complain about the food. Every time I ordered steak, it turned up on my plate, and it was like as thin as can be. I couldn't work out what was going on until right at the very end I realised that the guys were switching the steaks in the kitchen and giving me a minute steak instead of a proper rump steak. Couldn't believe it. Absolutely stitched up. Last lesson before we get into the show. Hopefully you're finding this slightly amusing. Take some earplugs, all right? And get your best snoring voice on, all right? So these are some lessons going on a guy's trip, and this was me on the giving end as opposed to the receiving end. I woke up at about 1 o'clock in the morning, and I saw my roommate leaving the room with duvet, pillows, and sheets in tow, not looking very happy with me, only to find out that he'd spent about 4 hours wandering around outside trying to find somewhere to sleep because I was snoring so loud. He did get earplugs on the second night, so he was able to get a good night's sleep. But anyway, guys, those are my lessons for a weekend away with the lads. Right, now, one more thing before we get into the interview. So there are some freebies given away on the website, the Trading Nut website. So if you do want to get access to those, so basically it's when the guys are giving some really good value in the actual podcast and you want something tangible to go with it, so like a chart or a video or something like that, they're up there in the members area, in the Trading Nut members area. So if you want to get access to those and you're not already a member, a free member, you can be a free member. You just jump on the site, and there should be some boxes on there to put your email address in. As soon as you do that, you get access to the free content that's given away as part of these episodes. So it's bonus content, so it's not in the actual episode. So it's downloads of charts, marked up charts, normally with strategies on them, and you guys are going to get that for free. Now, there are a few more gold memberships left, so if you wanted to try out the gold membership, it's only $1, and now this is the best deal going. It's only going to go up from there. It can only go up from there, right? So this is the best deal you're going to get. It's $1 to give gold membership a try. I mean, I've got one robot that's in there, so it's monthly robots, and it's the back catalogue of 52 Traders podcast. So that's over 123 interviews with traders from my old podcast. So guys, there's one of the robots that I've got there, and it's the first month that we've got an automated robot running. It's done 10%, and it's 1 month in. Okay, so this is the sort of stuff you get. You get thousands of profitable back-tested settings that you can use and apply. You get a lot of configuration, way more than what you get with normal robots out there. You get news filters, you get trailing stops, you get to apply proper risk management, all that sort of stuff. So guys, check it out, tradingnut.com. There should be a link in the show description. If you're on your phone, just click on that and go straight there. All right, folks, without further ado, I think that's my rant for the day. Let's get on with the show with Richard. All right, folks, we've got Richard Jackson with us today from Lepus Proprietary Trading and Jackson Capital. So Richard's a 15-year derivatives trading vet in Forex, and a number of other markets from what I can tell. So how's it going today, Richard?
Very good, thank you.
And so you're based over there in Melbourne. What's it like at the moment over there? I haven't been there for years.
Well, Melbourne, there's a lot of building going on, a lot of development, things like that. But Melbourne is the place to be. But we did slip to now second place in the world, I think. If you guys heard that, now we're one behind Vienna. Apparently.
Oh, it's the best city to live in, yeah?
Yes, most livable city in the world.
Oh, really? Oh, superb. I've been there like once on a work trip years ago, and all I remember was like one day it was freezing, and the next day it was like boiling hot, and it was the middle of winter.
Well, that's the thing. You always get the northerly breeze coming through, so you've got to be ready to take your jumper off pretty quickly.
Yeah. Unfortunately, we don't get that over here in New Zealand. It's very much like it's winter
consistent.
and it's winter, and then it's
Well,
summer.
that's the thing, when I get traders to come and trade for me, that's one of the main points that I look for our prop firm. We look for consistency, which is probably the most important thing. We don't really care about return on investment. We really just look for consistency.
Cool. Okay, well, look, let's get on with the show today. So the first thing I want to sort of touch on is your journey to where you got to today. I mean, I suppose it's a fairly long one because you've got quite an established couple of businesses there. So do you want to take us all the way back to when you first got into trading? How did that all start?
Okay, well, I started off my career as an electrical engineer at RMIT. Did a little bit of engineering with my father at a research testing facility out in Footscray. And I then, had a look at the markets and, I was very, very much interested in it. And it was kind of about the same time that all of the online platforms were coming out as well. So that was around about 2003. And then because of my engineering background, I was able to, understand, geometrics, coding, C+ coding, etc., which helped me be able to establish, the ability to code myself in what was then called MetaTrader 3.
Wow.
So that was, did a lot of that. Started off by trading the E-mini futures on the S&P and Russell 2000. Used the score from the S&P pit to assist me in trading or actively day trading, and that was very annoying, I guess, because I'd have to be up all night. My day would consist of getting up around about 4 o'clock in the afternoon, wait until the first news at 10:30 at night, and then go to sleep at around about 9 o'clock in the morning. So, that's not something that you can really live with for too long, unless you're over in the east coast of the United States. But I moved from E-mini futures to FX because obviously FX runs 24 hours a day. There's no closed session times there. I also looked at trading stocks, so doing a lot of back testing on AMI Broker and using analysis tool called Market Analyst, which is now called Optima. Okay, so that scanned the top 500 stocks in Australia, but you can also use that to scan the stocks in the United States. There's obviously a lot more stocks in the United States to scan, but my journey was really, coding, technical conditions to be able to take advantage of mean reversion type strategies or trend trading strategies. But I like FX more. FX, it's a derivative. I've got the ability for leverage, even though for all retail traders, and it's very important that retail traders understand that leverage is a double-edged sword. We can make a lot of money on the upside, but also we have to risk a lot. Risk or reward is simply, in my view, a balancing act. I've had a lot of clients come to me and say, I would love to have all of the return that I can get, as much return as I would love to make, 50% per annum, but I don't want to take any risk. I said, well, that's impossible. So you have to accept risk if you want the return. If you want low risk, you get low return. If you want high risk, you get high return. But I just digressed a little bit there. So let me get back to the main point. I went to trading FX, indices, and commodities using CFDs. And that's just through a normal or very popular brokers out there executing through MT4. And being able to code as well, gave me the ability to write algorithms on the market so that I can, really test them out. I would like to talk about that in just a minute as well. What the benefit is of using algorithms to trade for yourself. Things like EAs written in MQL4, but I'll get Cam. You can remind me to do that in just a short while.
I sure will.
So from there, I developed myself as a trader. And had a handful of clients, and then obviously the business started growing from there. Now that I'm getting a bit older, I want to replace myself as a trader because I'm focusing a lot more on the business at this point in time. Being a trader and trying to raise funds and trying to educate new traders, all those sorts of things. Once something's got to give. So trading isn't something that you can, set and forget or, just do on a part-time basis. It does take active trading is quite intensive. You've got to be experienced, but you also got to be on the ball, meaning that you need to be available for when the market is ready to give you something. Okay. So that, I guess, is my journey of where I've gone up to now. So Jackson Capital, I guess, at this point in time is our fund, or we use a managed discretionary account. And we take agency level funds, which is retail and wholesale clients, into it. And Lepers Proprietary Trading is our personal money, and we get our traders to trade for ourselves as well as our clients.
Cool. Brilliant.
Okay.
So there's a few questions here I've got on there. I mean, interesting, the old MetaTrader 3. So I suppose your journey, you were interested in it, you had the coding ability. Did you go straight into building automated trading robots, or were you did you educate yourself on the market some other way?
Yeah, well, I've done all of the, I've got my, yes, I've read probably about 35 books, I guess. Some of those, some of the great books that I've read, Fibonacci Queen by Carolyn Baroden. There's another one, Scott Carney, which is harmonic trading. The first book's probably the better one. The second volume, that's more of a fairly esoteric type of pattern that get formed every now and then. But
actually, both those guys have been on both those guys have been on the show already. So
have they?
Yeah, they've both been on the show. So I've had Carolyn and Scott.
Yeah,
as well.
Carolyn Baroden, that's a fantastic book. Trading in my view is really two main aspects. One is market timing, which Carolyn Baroden really talks about. And there's another book. Hang on, I'm just pulling it out now. It's a book called Trade What You See, How to Profit from Pattern Recognition by Larry Pezzavento.
Yeah, he's been on the show as well, or on the 52 Traders podcast, which is part of the membership over here.
Well, that's a very good book as well. So, trading, I guess, is, like I said, is about market timing and how to get in at the bet or at an optimal time, because what we need to do as traders is we need to really look at our risk to reward ratio. As soon as we can reduce our risk, then we've got the ability to have a high risk to reward ratio. So market timing is very important on that one. So so those guys are very good. I think am I answering your question?
Yeah, so it was very much how you got your education. It sounds like you went through a few books, but those ones being the best.
I've done obviously a lot of experience with other experienced traders. Another thing that I must encourage everybody to do, or your listeners to do, is find a mentor, find somebody who's got all this experience and somebody who's got not just an education company, because education companies seem to teach you something very quickly over a short period of time and then, let you go and work it out for yourself. I'd say 90% of being able to be a good trader is having the experience and having the right psychology, right?
Yeah.
If you're not accountable, if you're sitting in your house on your own trading, you're only accountable to yourself, and that accountability will really, you can always, everybody can convince themselves of, whether something was right or wrong. But if you've got an experienced trader holding you accountable for what your actions are and how you trade, then you will condition yourself into becoming a good trader in the end. And that will be it'll be a shorter process than having to go through the pain and of teaching yourself and getting that experience.
So true, so true. I've got a mentor myself. So
let me just go back, and I think you were asking me about my algorithms, and because I tend to just go off and start talking about other things.
But I've got a note of that, so we will go back onto those. Can we just first of all, so where did you find your mentors?
Well, I just really found my mentors, on the internet. I found a group of traders in Melbourne as well. So, I went and spoke to them. It's not really just going and talking about it over a beer. It was more, sit down with me and we're going to, go through each and every single trade that you've done in the past. So it's not a social thing. It was more of, very active. So, there's plenty of groups out there that will offer that type of thing. And I guess that's why I've set up Lepus Proprietary Trading the way that I have as well, is that we focus a lot on the mentoring side and the fixing of the psychology side, because, some young guys, they have a lot of hubris inherent in them. They have cognitive biases, which we all have in us, that will, affect our performance when we're trading.
Cool. Okay, and before we get onto the algos, so did you do much manual trading back then?
Yes, did all the manual trading. Well, I guess this is a good segue actually. So, I started off manual trading. In my mind, I was not doing too well when I started. Nobody does well when they start, okay, because it's all a learning process. So they thought, okay, well, let me try and do the algo trading. I've written probably about 800 EAs in the last 10 years. Now, my opinion of expert advisors, especially when backtesting, even right down onto tick data, is that EAs will have their day in the sun. Okay. Also, an EA should never be left alone to run on its own. Okay, turning your back on an EA is probably the most dangerous thing that anyone can do. It's very easy for a trader to run a back test and then curve fit their parameters to fit the EA. Okay, is that something that's going to happen, going forward? Well, typically not. Okay, it will work for a while, but then you'll end up getting hit. I use EAs at this point in time really for alerts. So I send SMS messages to my phone using EAs if there are certain conditions that are met, or technical conditions. Also, EAs, we need to really find, there needs to be an input for a fundamental overview in it as well. So EAs, I see EAs, if anybody does use EAs, it's like a little bit of an augmented human, it's like a RoboCop type of thing. It needs to be part human still, and then part machine. So, so now I've gone back to, and I really do believe in manual trading. Manual trading is or a human has the ability to adapt and to be dynamic, where a code can't be. If we were going to enter in every single condition, possible into the syntax of an MQL4 script, then the syntax will be just so big that it will run slow. Okay, that's why, really the only place I see algorithms sitting at this point is if you're going to use it for arbitrage purposes. Okay, so HFT, latency arbitrage, that type of thing. So just be careful about using algorithms for anybody who is considering doing that.
Okay, cool. So the out of the 800 that you had, I mean, do you want to sort of give us a potted history of how you sort of found them?
Well, it's
operating?
it's very easy for people to, see a nice equity curve on the internet. We've just got to make sure that it's not a martingale type EA or grid system EA. Grid systems and martingale will, even though they look nice and pretty for a little while, they will kill you at some point. Is there any, and I did cut you off there, Kevin, I'm sorry, but is there any that did work, reasonably well? Yeah, I mean, like I said, some of them had their day in the sun. I did use them, but you've got to be right on top of them. You've got to be changing the code. You've got to be making it better and better every day, I think. So I prefer just to use them as alerts and then allow me to have a look at the charts to then make a judgment from there.
Cool. All right, so that gives us a nice little history of how you got to where you are now, which is great. So, can you give the listeners some insight into your trading style these days? I mean, what would you call your style?
Well, we've got two main styles. The first one is a swing strategy. So we use Fibonacci and market harmonics to get into our trades. And then we also use a news release strategy. So if we've got a big shift in consensus versus actual, then we will enter into trades based on the news release.
Cool. And what timeframes do you actually analyze when you're looking at entering these strategies?
Okay, so the swing strategy will use a daily to place any major trend lines. Then we'll drill down to a 1 hour chart. So our swing trades are based on 1 hour charts. Our news release strategy is based on a 5-minute chart.
And you don't do any sort of multi-time frame on the news release one?
No, I mean, we'll already have our main trend lines, etc., already on that chart. So we put our trend lines on the wider time frames, but the actual entry and exit conditions, we can just sit on the 5-minute chart.
Cool. And average trade duration, how long do they typically run with both those strategies?
Well, from a day to a couple of days. So swing strategy will, full from beginning to end, will take probably about a week. And the news release ones will be from an hour to a couple of days.
And risk to reward ratio combined with winning percentage, what does that look like?
For our particular strategies, well, we combine it all onto funds. So the fund has both of them combined. So if we separate them, I don't have those figures available, but risk to reward, we're looking for on a swing strategy. We look for around about from the entry with our stop. Not reduced, it's around about 1.5 to 1. When we do reduce our stop, it goes to around about 5 to 1 is our risk to reward.
Oh, cool.
Win strategy is around about 40%.
Righty-ho. And what instruments are you looking to trade those across?
Well, that's just all the majors on FX. We stay away from exotics. Things like the lira at the moment is a hot topic, but the spread is just way too wide. We really don't like trading widow makers like the ZAR and the TRY, etc. But on the indices, we'll stick to the major indices, the ones in the United States, Dow and S&P. We'll have a look at the London 100, and we'll also look at the Japanese 225.
And what would be the total number of trades you'd have running and managing those trades at any one time?
We do keep our volume low, so we can afford to have a group, a lot of trades open. We've got 5 traders in our top 1% of traders that will trade for us. So, and they're only allowed to have, 2 to 3 trades open at one time. So we can have, let's say 10 trades open at one time, 10 to 15.
Righty-ho. And what does the typical trading day look like?
Well, like in any FX or, indices, most of the moves happen during the night. So we go from London session open right through to about 2 or 3 in the morning.
So you got guys in the office at that time of the day, or how does that work?
No, not at the office. They'll just do it from their own personal offices, which is probably, their own home offices.
Okay, cool.
Yeah, because we trade on the FX market, and we've got available platforms, etc. They trade on their own accounts, and then I run VPS that sits in NY4 and LD4, which will do the execution.
And so when you were, I suppose you're talking now more about focusing on the business as opposed to the trading, or trying to get out of the trading. I mean, when you were doing it yourself, what did that look like at 2:00 in the morning when you were, up that late?
Well, you'd have the Bloomberg TV running, so you've got something going on in your ear. You rugged up with a heater right next to you, I've seen some massive moves. I've seen some great things. I was partook in 3 limit downs on the S&P 500, which was awesome, right? You wake up, you wait for the session to open, and then you can't trade because it's gone limit down. That's pretty good. So sometimes it's really boring. Sometimes it's it's exciting. So what it is that we're during the night, most of the news comes out on a Thursday and a Friday. If we've got FOMC or any of the non-farm payrolls, CPI, etc., that they're good to wait for them to be executed.
Cool. Yeah, it is. I'm down in New Zealand, and it is that sort of hour of the day that you do need to be up. It's better for us in the winter than it is in the summer. The summer's just ridiculous.
Yeah, that's right. Yeah. Well, that's the thing. Daylight saving, you always have to adjust for daylight saving, and it's a bit painful sometimes when the start of the US session doesn't happen until 1:30 in the morning.
Yeah, exactly. Well, for me, it's 3:30 in the morning.
3 in the morning.
Yeah. So, don't see much of that. Right. So, I saw on your website, you've got cryptocurrency in there. Do you want to walk us through? Are you guys trading cryptos? How are you trading them? Which pairs are you? Well, not pairs. Which cryptos are you trading? And just your general view on the whole crypto scene.
Sure. Cryptocurrencies. It's just another one of the hype things that are happening at the moment, I guess. I've got cryptocurrency on there because we may touch on crypto in the future. We don't actually trade it right now. For a number of reasons, which I'll go into in just a second. But if I do decide to go into crypto, we'll definitely trade it. But I'm yet to see it behave in a way which is good for active trading, not for investing. Okay, so there's a difference between investing and actively trading. When we're actively trading, when investing, we're it's a long-term buy hold. So typically somebody out there will go and buy BHP, sit on it for 5 years, and then, it most probably has gone up. Okay. What we do is we actively trade on smaller time frames. So people when they invest with us, they're not really investing in cryptocurrency. They're not really investing in FX. They're not really investing in any of the other instruments that we offer. What they're doing is they're investing in us and our skill set. Okay.
Yeah.
So because we can go up, we can go down, we can go, we can make money based on speculation. That's what they're investing in. Now, we love FX. We love oil, gold, silver, indices because they have underlying fundamental economic news or economic conditions which will move that market. Unfortunately, with cryptocurrency, the only thing that's really moving cryptocurrency is people who are investing in cryptocurrency. There's no fundamental or underlying economic reasons why it should move. Two things move the cryptocurrency. One is the investors who are speculating on it, and two is the underlying algorithm of the blockchain. So unless there is a connection between fundamental analysis or economic conditions, we're probably going to stay away from it at this point in time. Okay. Secondly, I'm not a fan of crypto because of how many exchanges there are out there. Because certainly when we were up at about 19,000 on Bitcoin, some exchanges were displaying 16,000, some were doing, 17. There was price discrepancies between all of the exchanges. So how do you know what the actual underlying value of it is? It's a very inefficient market. We kind of prefer the more efficient ones for the liquidity level and for the fact that, they're high-level traders trading it. So I guess they're the reasons why, I'm not too much of a fan of crypto at this point in time, and I stick with the other ones that are displayed on our website. However, in saying that, I do have it up there because at some point we may engage in it.
Righty-ho. And just while we're on the subject, ICOs, what are your sort of views on those, if you've got any?
Well, ICOs, we saw China ban ICOs for the second time. The crypto, all of these, you've got to be careful. Every man and his dog wants to get a bite of this little hysteria that's going on at the moment. They think, let's just go and make a new ICO and then we'll turn ourselves into millionaires, right? As an investor coming in, even if you're coming in at the seed level, you really got to understand very well what the underlying blockchain algorithm, what the benefit or the disadvantages of that underlying or the only asset that's there. If you don't understand it, then I'd probably say stay away from it. The hysteria will die down, and I can pretty much almost guarantee every one of your listeners that it will get regulated at some point. It's just a matter of time. But in between now and when that regulation comes through, then you've got the ability to make speculative income from it if you want to take the punt on it. But if you're going to do if you're going to be a long-term investor in it and kind of buy yourself 2 Bitcoins and forget about it, might get yourself into trouble. Okay.
Good insight there for you listeners out there as well. Right, so let's steer away from cryptos now and go back onto sort of trading. So I know that you said at the beginning that you could code in C++ and or C++ and all this sort of stuff. So you had an engineering background. What do you think made you different from the average trader out there the guy that sort of comes in and it doesn't work for them and they give up and leave?
Well, this is exactly what we do. Okay, so we take normal guys. I'm not sure whether have you ever heard of the book called The Turtle Traders?
Yeah.
Yeah.
Yep.
Okay. So the book basically, just to give listeners a little bit of a synopsis of it, is that two fund managers back in the 80s decided that they could take people off the street and teach them how to trade. Out of those 10 people, I think they did a bet for $1, something crazy like that. And then what they did, one of the fund managers said, yes, I can. And the other one said, no, you can't. And what happened was they took the 10 people and 9 of them failed. Okay. They said, here's the rules.
Yeah.
Here's an overview of how you do it. Here's specific entry and exit conditions, etc. All of those sorts of things. And only one guy made it. Okay. The reason why that one guy made it is because he didn't have all of the psychological issues that everybody else did, because most people are fearful of getting in. They have that fear, hope, and greed type of thing that goes along with them. So I guess that's exactly what we do. What we do is we take ordinary people off the street and we turn them into traders. But we don't do it over the course of, a 3-day course. We do it over the course of 12 to 18 months, okay? For the average trader out there, it's possible to become a good trader. It is, but obviously you've got to be dedicated. You've got to be, you've got to want to do it. You've got to have you've got to go through the emotional ups and downs that come along with it. And you need a mentor. You need somebody who is going to guide you, keep you on track, keep you accountable, all those sorts of things. So it's definitely possible for guys, anyone, to do these type of things. You don't have to be a coder. You can manually trade, and you can manually trade well. There are, certain rules out there. It's like, learning anything. It's hard to understand it at the start, but then, as you get used to it, as you see the patterns present themselves more often, then it is possible to be able to see them as they're forming and be able to trade it.
And I suppose stepping back into yourself, you obviously went through some of this process. How did you get through it without that sort of guidance?
Well, that's when I started trading, I borrowed $30,000 off my girlfriend and lost it all.
That's a good way to do it. As long as you
well, that was a wake-up call, right? That was like, okay, I didn't practice. I didn't, all I saw was a jackpot view of the market. I can leverage up and I can trade this. This is awesome, right? All I need to do is make, $300 a day, and then I'm on an $80,000 income, right?
Yeah.
But if I lose $300, then I'm going to make $600. Okay. Those type of things. I've been doing this for 15 years. It took me 5 years before I was any good because, I had to go through all of that pain. I had to go through the pain of telling myself or realizing that, mate, you're not a hero, right? You're not good. You got to knuckle down and you got to do the work, right? I remember sitting there at my desk crying because I really wanted to be a trader so badly and it wasn't working for me, right? Depression, crying, anxiety, all these things went through me until I decided, okay, now I've got to do it properly. I've got to go get somebody who's going to teach me, who's going to keep me on track. I've got to read 30, 40 books to be able to become good at this. So after a while, it happened. And I saw it happen. And I guess some of the guys that come in here, they're destroyed. They have been a trader in the past, and they've come in all upset, and I've said, don't worry about it. Let's just start from the beginning. Okay. Let's teach you from, let's unlearn what you've learned, and we'll get you back on the right track. And their improvement, and you can read it on my website. Some of the guys that have come in and they were failing and now they're good. I've given them allocations now to trade with. So it's possible for for people to do it.
And was there one particular day, or was there like a day, or was it over a period of sort of weeks or?
Yeah,
or
no, I think
time?
it was like a one day when I had, I was losing consistently, so I was a very good loser when I started. But it was one day when I really gave it a good crack, and then I just basically lost the whole account, and that was just like devastating. But, I had a good girlfriend at the time, and she said it was okay and all those sorts of things. But, it was a wake-up call.
Yeah, and sorry, I mean, I was probably more interested in the one day that, was there a day when it sort of turned around and you were like, I finally got it?
For me, it was it was slow, right? But yes, I mean, I guess there is a period where that happened, where I really understood what risk and reward was about. So, let me just mention something here. Just hold. Can I just hold on 1 second?
Yeah.
I'm just got to find something here. It's in behavioral economics. Basically says that it's called loss aversion. I'm not sure whether it'd be good for your listeners to look this up. It's a heuristic called loss aversion. People, if I give two possible outcomes, one is a gain and one is a loss, okay, and both of those people or that single person can understand that, they will favor the gain than the loss, okay? So what that means is in behavioral psychology that people, when you get a loss, you tend to not want to get a loss again, okay? Where as a trader, you have to accept losses. You have to become very good and very thick-skinned around having a loss, okay? Because you need to be able to trade that next time. You're going to need to be able to put the order on the market without any hesitation, without any fear, okay? And this is something that, that took me a while to finally get. It clicked for me, where that, if you do that and you've got a good risk to reward ratio by having your stop and then moving your stop to close to break even, then you increase your probability. Even though I've got a small win-loss ratio, I've got a high win-loss ratio, risk to reward ratio. So therefore, over the long term, then you make your money. People seem, or especially retail traders who get a string of losers, it tends to screw with their psychology so much, then, all of these other emotions come on board, and then they end up making mistakes and failing.
Cool. Really, really interesting. So if you're a retail trader working a day job, what steps would you take to start earning income trading?
Well, just realize that it's not something that can be done overnight. Okay. If you want to be a trader, even if you want to do it you can still have a job and trade. That's no problem. But just you got to knuckle down, and you got to learn. You got to get the experience as well. Okay, and that experience, is technical analysis, fundamental analysis, and behavioral economics.
So if you were to split your trading up into technical versus fundamental, what would that split look like?
Fundamental, we look at what the fundamentals are like. So we see where the price is being factored in. We look at the fundamental side to, have a judgment of where money flow is. Also for the news release strategy. So, technically, I guess, we're looking at probably about 60% technical, 40% fundamental.
And diving into the technicals, I mean, on a price chart, what three things would you recommend a trader educate themselves on?
For your traders who want to trade foreign exchange, I highly recommend to put institutional moving averages on your chart, which are the 100, 200, and 50 period simple moving averages. they are commonly used as support resistance lines. Also, your trend lines are very important. So trend lines across the top or across all the highs for downtrend, trend lines across all the bottoms for or all the lows for uptrends. So if you get a convergence of, let's say, 5618 Fibonacci on a leg, with the convergence with a moving average or one of the trend lines, then you've got an increased probability of that at least moving a little bit in your favor. So it gives you the ability to reduce your risk. Because what we've got to do is we've got to remember that there is no secret sauce, there's no holy grail, there's no secret to what we're doing. We're trading in chaos. And chaos means that you have no ability to predict the future on any one given outcome. We have to use probabilities. And if we can use probabilities where we can have a good risk-to-reward ratio, then that's going to work in our favor. So looking for convergence points is going to increase your probability of it at least moving a little bit in your favor. And that's the way we do it, I guess.
Cool. Right, let's move into the quickfire round. So I'm going to ask 9 questions to Richard here, see what it takes to become a successful trader. So first question is, how long did it take you to go from newbie to consistently profitable?
5 years.
What's your mental approach to trading, and do you have any special techniques you can share with us?
Understand the human heuristics and cognitive bias.
What's your favorite entry setup?
50% convergence strategy.
And that's 50% on the Fib, yeah?
50% Fib with convergence with support resistance.
What strategies do you use to exit or manage active trades?
We use a AB equals CD. So we put our take profit at D point, and we manage to trade from A point on the leg, and then we move our stop up to just below C point.
What's your recommended trading book?
Fibonacci Queen. That's the Carolyn Baroden one. What's it called? It's called Fibonacci Trading by Carolyn Baroden.
And if you guys do want to hear that interview with Carolyn, then it's in the 52 Traders Archive, which is part of the Trading Nut membership. So if there was one thing you'd recommend any retail trader spend the next month mastering, what would it be, why, and how can they go about mastering it?
Master, I guess master, what your legs of a trend are. Okay, so even if you go into Elliott wave, what's your 1, 2, 3, 4, 5 waves? Master that. If you can master that, then you can really start seeing, the support and resistance levels.
What's your preferred broker and trading platform?
Oh, okay. So trading platform's MT4. We just use it because it's very common. Preferred brokers, I've got 3 guys out there that are my preferred brokers. Tyson from MEX Exchange, MEX Exchange. He's a good guy. He'll look after you very well. He's very knowledgeable. I've got Dean Hyde also from Blueberry Markets. They're really nice guys. Great customer service, etc. And also Pepperstone. They're very big. The guys down there at Pepperstone are very helpful and very good with what they do.
Yeah, I've spoken to Dean before. He sponsored the show once back in the day, so common connection there. What's your worst ever trade?
Worst ever trade when I started trading. A common mistake that a lot of traders make, holding on to your losers because you don't want it to lose. You've got hope of it coming back, and cutting your winners short. Okay, a good trader has the opposite psychology. So, when I started, my worst trade was me holding on to, a couple of lots on the a couple of contracts on the E-mini S&P when during 2008, and I probably blew about $8,000 in one night.
If you could leave our listeners with one piece of advice, what would it be?
Sorry, say again. Listeners with one piece of advice?
Yep.
Educate yourself. And please understand you can't do it on your own.
Good advice, guys.
There you go.
And education is massive. So if even the guys that I know that are doing really, really well. Sorry, there's an echo there. I just said both those words twice. They continue to seek out new education all the time. Right, last question of the show here, Richard. So we'd like you to give us the bones of a full trading strategy, entry setup, stop loss, take profit targets, market time frame, something our listeners can try it at home. What have you got for us there this week?
Okay, well, I touched on it before. So, set up your trend lines on your daily and 4-hour chart. Just stick to the majors on, Euro USD, Sterling USD, Swiss, USD Swiss, dollar yen, etc. Try not to trade exotics because, the spreads are too wide and you'll get eaten up. So start off with your trend lines on your wider time frames. Drill down to a 1-hour chart. Have a look for a reversal pattern, either head and shoulders, double bottom, or a break of a break of a trend with divergence. And then with that AB leg, draw your Fibonacci and have the 50%. Look for the 50% to 618. If that converges with the 100 or 200 period moving average or a trend line, then you've got a high probability of that working in your favor. Put your target at D point and put your stop. Start your stop off at A point and then move it to just underneath C point. If you want to have a look at how that works, I'll send an image over to Cam, or I can put a video of it up on my blog on my website.
Sweet. I think we probably will need an image or some explanation of more detail. Even that one, usually I can note these down and sort of pick it up, but that was, I think we do need some supporting material. So guys, you know where to go for that. Probably just head over to the Trading Nut website and find this interview, and then there'll be links on there to get access to whatever Richard's going to put up there for us. So before we wrap up, what is the best way for the traders to get hold of you?
I'll just come to Lepus Proprietary Trading, have a look at our website, go to the Traders tab, and if you want to talk to me, I'm free for anyone to have a chat to. Got a few guys here that can chat to you as well. So, and we're always looking for traders. So if you've got the interest in coming to trade for Lepus and trade my funds and our agency funds, then would like to talk to you.
A big thank you to Richard for sharing with us today everything we've discussed.
Can I just add in one more thing?
Oh, yeah, go for it.
Sorry, mate. If anybody's interested in also in investing, if they want to invest in our fund, go over to jacksoncapital.asia.
Righty-ho, guys. We'll get those links up in the show notes. Anything else, Richard, before I wrap up?
I think that's it. That's
cool.
It, my man.
Okay, so get over to tradingnut.com, search for Richard in the search box, and until next time, I wish all my listeners trading happiness and success. All right, guys, hope you enjoyed that interview. Now, look, we did manage to get a couple of screenshots or charts, marked up charts from Richard, and I've chucked them up in the Trading Nut membership area as part of the bonus content that you get as a listener. If you jump over there, leave your email, you'll get given login details to get into the membership area. There should be a link on your phone in the description to send you over to tradingnut.com. If not, just search it up, and there'll be a way to put your email address on. I'll make it pretty easy. And if not, check out Richard's show notes. They're all marked up. They've got timestamps. There's quotes. There's YouTube videos as well. If you're not on the YouTube channel, you prefer YouTube, watch a YouTube video. Also, do appreciate it. If you're on your phone now, jump on there, leave a review. Really do appreciate those reviews. And last but not least, there's a few more spots left, remember, for that gold membership. So if you want to come on board with the best deal ever, they're just about to disappear, literally just about to disappear. So there's a few more spots left. You can see how many are up there on the site. If you head over there, if you're listening to this in the future, check it out anyway. There'll be something else there in its place, I assure you. All right, folks. Without further ado, if you're not in if you're not in the gold chat room, I will see you on the airwaves next week. If you are in the gold chat room, then go over there and have a look at some of the charts that I posted up, some of my trading. All right, folks. Until next time, have a great trading week.